Hi, welcome to the post-budget session. What was the market expecting from this budget? When I say market, there are two entities. One, which is the corporate sector, and the other entity is people like you and me, individuals. So the corporate sector was struggling for growth even pre-COVID. Hence, they were looking for some big bang budget which will put the economy on a fast growth track. Two, a lot of sectors have got negatively impacted because of COVID, and they were expecting some kind of a relief or support measures which will help them recover faster. Third, which basically was an help or assistant to the manufacturing segment who could take advantage of the supply chain disruption that has happened because of COVID. These were the three key expectations from the corporate Inc. While the individuals were expecting one, increase in the HTC limit. Two, it could be increasing the basic tax slab limit. Or three, either increase the standard deduction available. Now, they were not expecting all three to come by. They were hoping that either of them will be fulfilled. So, what was the government challenge towards fulfilling the commitment of both the corporate sector and the individual? See, resources are always limited, and a country like India, we have limited resources at disposal. And if you know, as such as a country, we are earning, for example, 90 rupees, and we have spent this year almost 100 rupees. So there is a fiscal deficit of a gap. So government has always been struggling with expenditures which always outbeats the income or revenue of the government. So in order to provide a big bang budget, you need a big amount of money. It means higher expenditure, and the revenue may not be commensurate in the immediate near term. So government was struggling how do they give a big bang budget and compromise fiscal deficit or fiscal prudence. So this was a big challenge which the government was facing to make. How did the budget deliver to people's expectation? And as I said, if you have limited resources, you will always have to make choices. The first choice was either the government funds growth or controls fiscal deficit. The second choice was whether he gives enough impetus to corporate sector or also makes the individual people happy. So the government made a very, very clear choice this time. They chose growth over fiscal prudence. They preferred giving a big bang support to the corporate Inc. and not spending too much on personal consumption side. So what did the major highlight of the budget was? First, the government has allocated a huge amount of money for capital expenditure which is approximately 5.54 lakh crore, and that is a huge amount of money that will basically go towards funding infrastructure, growth, healthcare, and road transportation, all those services. So this capital expenditure in terms create job opportunities, will help the government to come back on track. How is this important? If you break the GDP of a country, it rests on four vehicles: consumption, private sector investment, government spend, and net export minus import. Consumption is there. The private sector investment is very, very low because a lot of those people are sitting on excess capacities. The government expenditure is one thing that had to happen to get the economy back, and rightly so that the government has put a strong impetus there. So with this, an interest rate at such a low level, and most top corporate borrowing at a very, very low interest rate, will provide them an opportunity to actually set up more capacities and down the line very easily, that could fuel the private sector investment growth also. So this was the first thing that they did. Second was focus on efficiency via either privatization or asset monetization. So the divestment target, meaning privatizing public company, was approximately 1.75 lakh crore that they need to do. They will privatize 2 public sector banks this year and 1 general insurance company. The IPO of LIC increased the FDI limit of insurance company from 49% to 74%. They are setting up a DFI, the Domestic Financial Institution, to fund infrastructure projects and also promote competition in power sector. These are measures to increase efficiency in the system. The third thing that they did was added a big boost to the struggling corporate credit market. This they did by setting up 2 things: asset reconstruction company and asset management company. The ARC is supposed to buy back stressed asset from bank, and AMC would buy investment grade bond, creating liquidity in the corporate market. Then let's come to the direct tax. Was there anything for the individual? Unfortunately, there was nothing much for the individual. Yes, there were minor changes which was made, and to an honest extent, this budget was negative for individual in a way. There were no changes in overall income tax slab. Now, if you look at the interest on EPF, over and above 2.5 lakh will now become taxable, which was completely tax-free in the earlier instance. Now, given that the new wage code, which applies from 1st April, which basically mandates that the 50% of your salary should be basic and dear and allowance, with that your PF deduction will go up. And with increasing PF deduction, after an interest component of 2.5 lakh, anything above and that, the interest will be taxable. That's a negative. Another thing which was a negative in the budget, that ULIP investment for a premium of 2.5 lakh and above, which was until now tax free, has now been put under a tax ambit. So these are changes which were made. Apart from that, more from convenience perspective, like you have a pre-filled tax file, IT return file will be provided to you. People above the age of 75 and above is not required to file IT returns. Those were measures. The appellate or the assessment and any kind of a redressal mechanism were all made faceless. These are kind of qualitative measures which were taken in this budget from direct tax perspective, leaving the individual common man or the middle class man quite unhappy with no more freebies given to them this year. But having said that, why the market positively reacted also was, apart from the measure, and also that in a year like this, most likely a lot of people were expecting that there could be some cess or a COVID cess kind of a thing which did not come through. So like no news is good news, no tax, additional tax also was a good news from individual perspective. How does all this add up for the capital market? What does it mean for the stock market and the bond market? See, given the fact that it is a big bang budget and it's given a boost to the corporate sector, the equity market over a period of time will be doing well. Okay, one because of the budget impetus, and two because of the excess money supply in the system which is coming through. But having said that, the market is already trading at a very high PE, so one needs to be cautious. But can this party last more longer? Yes, of course, the party can last longer. Very difficult to predict the top of the. For the bond market, given the fact that the government has compromised on the fiscal deficit, and the fiscal deficit for the current year, which is ends March 2021, is 9.5%, which is much more than the market expectation. The next year fiscal deficit is 6.8%, which is again higher than market expectation. And over the period of time, the fiscal deficit is expected to go to 4.5% by 2026. So this means that the government will continue to borrow a lot of money to fund the gap. Now this borrowing will not allow the interest rate to come down very easily. And given the fact that interest rate is already at a low level, so it can only go up. And if an interest rate goes up, it is negative for the bond market. Finally, what kind of sectors can it impact? See, given the strong budget that we have seen, and it is very similar to 2004 and 2008 cycle, you will see that during the 2004 and 2008 cycle, a lot of the cyclical stocks did well, like banks, metal, oil and gas, infrastructure. All these companies did well. We feel that the same era could get repeated, and this sector will try to run up much faster. There could be a good rally in mid and small cap sector. This is what possibly is the expectation that I have from this current budget, that how it will affect the stock market. Now finally, coming to people's portfolio. If you are already investing or you are new to investment, how should you navigate your portfolio at these levels? As I said, that the market is already trading at an all-time high. It is very difficult to predict the market, but it is during these times that accidents and mistakes do happen. आपसे कभी भी गलती स्लो मूविंग ट्रैफिक में नहीं होगी. एक्सीडेंट हमेशा मेजर एक्सीडेंट हमेशा हाईवे या स्पीडिंग ट्रैफिक में होता है. तो इसी तरह इन दिस हाई वैल्यूएशन मार्केट you have to be extra cautious. So in this market, invest only via SIP or systematic transfer plan. Do not take very aggressive bets. Secondly, maintain asset allocation. Debt or equity को balance करिए. Do not chase greed. If you become too greedy and if your portfolio is over equity allocated, maybe in the immediate term आपके returns बहुत better होंगे, but over long term period, if the market corrects, then you might face good losses. So you have to have balance or greed and fear in this market. The market is at a very risky zone. You have to ensure that you balance equity and debt well. You have to have more different asset class in your portfolio to ensure that you have a good yield without compromising or increasing your risk disproportionately. Thank you very much for watching this video, and please share your comments and feedback. They are absolutely essential for us. They only help us produce better content that is palatable to you, and you enjoy watching them. And if you really like, please hit the subscribe button and the bell icon so you get notification regularly.